Hello, welcome back to Rajat Bose YouTube channel. We are here again, this time for the 18th edition of Market Outlook, Stock Recommendations and Stock Reviews. This time, on popular demand, we are going to add back the cnxmidcap. So, we are going to cover Nifty, banknifty and cnxmidcap. Apart from the three indices, we will continue to do 4 or 5 stock reviews and 2 recommendations. So this will be the format of the program. The recommendations would be at the end, but the other thing can be juggled a bit. Remember, this is the expiry week of August. 31st August had been the expiry day, so there had been a lot of volatility and the Nifty staged some recovery. We would discuss in detail how things are looking from here on. We have had some good recovery during the last week. After that, there had been volatility. So let's see what we can envisage for the next week. Now we are going to study the Nifty in detail. For the last 5 weeks, we have seen that Nifty has been coming down after posting a high which was very close to 20,000 mark, 19,991. From there it has come down to 19,223. This week's low is also the low for last 1 month and 1 week. So this being the case, last Friday's movement was very encouraging. It opened around 19,300, went down to 19,222 and finally closed at 19,435. And this 19,223 to 19,435, this movement happened on Friday itself. Friday was completely different from what was happening for the last 4 days. So that 9-week moving average has given support. 19,300, unless broken, we can expect a recovery rally to continue. But we need to see that it crosses 19,450 to about 19,500 level. If it were to manage to do that, then we can expect higher levels. On the way up, of course, the 19,990 to about 20,000 would continue to remain the major barrier. But prior to that, 19,700, 19,750 would also act as a resistance zone for the Nifty. So far we were discussing about the weekly chart. Now we are moving on to the daily chart to see how things look there. One thing about the daily chart of the Nifty is that it is very clear. There had been 2 days when the Nifty was 4 or 5 trading sessions back. It tested its 20-day moving average, and on Thursday also it tested its 20-day moving average, as you can see on the daily chart that is on the screen. Now the only redeeming feature was found with a green candle on Friday. There was huge buying on that day, but mind you, prior to that day, during the week, there was good amount of selling on Monday, as well as good amount of selling with a lot of volume happened on Thursday as well. Throughout the month of August, the green volume bars did not show as much buying as the last day, that is 1st of September. The green volume bar is much above any volume bar in the month of August. So there was good amount of buying. So chances are that we might see this recovery continuing. But for this recovery to really take hold of the movement in the index, it needs to stay above 19,422, which is roughly the 20-day exponential moving average level, and it should not fall by any chance below the 19,300. Prior to that, strong support is expected around 19,350, 360 kind of levels. So if the Nifty manages to stay above 19,450, then it would be much better for the index. And if it were to fall below 19,422, then we should watch out for the support area between 19,350 to about 19,300. After that, 19,250 to about 19,222, the last week's low. That should be closely monitored. Only when you see that the Nifty stays above 19,450 for at least 2 to 3 consecutive sessions, then expect further upswing, the upswing to continue. Otherwise, it would last Friday's movement should look more like a flash in the pan. But let's see, at least it has not broken the 50-day. It has conquered the 20-day on the upside on last Friday. So there would be good amount of firepower being exchanged between the bulls and the bears. It would be an interesting week for the Nifty. Bank Nifty. Bank Nifty needs to stay above 44,500, or else it is likely to go down. Even Bank Nifty showed considerable movement throughout the week, and after that, Bank Nifty is now giving a new signal. What is that new signal? What is it? What is the import of the whole thing? We are now going to discuss. Actually, the Bank Nifty was not showing as much weakness as the Nifty if you look at the weekly chart. Whatever was happening on the daily chart, but the weekly chart consistently maintained itself above the 20-week moving average. 20-week moving average roughly corresponds to 100-day moving average, 100-day exponential moving average. So 20-week moving average for the last 3 weeks, it supported the Bank Nifty. The Bank Nifty closed this time at 44,436. 44,436. 44,500, we had been mentioning that 44,500 is a very critical area. If 44,500 is decisively taken out, then 45,000 to about 45,100 would be the next target come resistance zone. But only when 45,500 to about 46,000 mark, if that gets taken out, then only you will see that the Bank Nifty would be strongly marching ahead. But now we need to see whether the Bank Nifty manages to stay above this range of 44,400, 44,450, and if it were to fall, it should not fall below 44,150. If it were to fall below 44,150, then it would become weak again. So just like the Nifty, we need to watch out the movement, and we need to watch out how both the parties, the bulls and the bears, how they manage to take control over the proceedings going forward. If we have to say that the intermediate uptrend that continued from early April to about early August, when you look at the daily chart of the Bank Nifty, you find that for the last 3 sessions prior to Friday, it was showing red bodies, red candles. Red candles are bearish candles, but come Friday, there was a considerable bullish upsurge, and finally the index managed to close at 44,436. It is just below the 50-day moving average, which is located at 44,463. Now this moving average has been the bugbear for the bank nifty, just as the 20-day moving average too. And hardly ever it is found that a bearish death cross between 20-day exponential moving average and 50-day exponential moving average produces only 2 days of downswing, and after that the recovery happens and a new uptrend begins. That normally doesn't happen. So chances are that we would see again selling coming back in the bank nifty, but so long as the Bollinger Band, current level of the Bollinger Band, which is around say 43,650, unless taken out by the bank nifty, it still has a fighting chance to at least remain range bound instead of falling. But the import of the death cross between 20-day and 50-day exponential moving average suggests that bank nifty is unlikely to sustain this kind of upswing that we have seen on Friday, and even another day it found a movement towards 45,750 kind of levels. It is likely to come down again. So watch out for the level of 44,000. If 44,000 gets taken out, then definitely there is likely to be a taste of 43,650. 43,650, if that gets taken out, then there will be a considerable pressure, and we might just see it, the 200-day exponential moving average around 42,727 now. The index could be headed to that end. So at higher levels expect more selling, and unless 44,750 is taken out, bullish upswing that has been seen on last Friday is unlikely to continue. CNX midcap. Whenever the market bounces, this is one index that bounces. Alongside it, sometimes it goes up alone. It had been the best performer. We dropped it the last week, but we are bringing it back on popular demand. So we are going to study the weekly chart as well as the daily chart of CNX midcap. Our third index is CNX midcap 100. CNX midcap 100, this is one index that continues to beat any kind of bearish prognostications, because on the weekly chart you continue to see one green candle after another. There is, I think, about 10 consecutive green candles, only one red candle between say April, late April, early May to about the whole month of August. So CNX midcap continues in its relentless bullish upswing. Nothing much to say here except for the fact that it is now about to get past the 40,000 mark. Only 550 kind of points left to get past that 40,000 mark, coveted 40,000 mark. It may continue. Where is it going? Really very difficult to predict, because it is on a one-way traffic and the traffic continues to move on. Now if you look at the daily chart shows red candles, but doesn't matter because it hardly ever falls below the 9-day exponential moving average. Mostly the 9-day exponential moving average continues to support the CNX midcap. That means institutions selling, FII selling, whatever be that, the the retail people continues to buy mid cap and small cap stocks, and the CNX mid cap. Relentless march on the upside by CNX mid cap exactly shows that. So it remains bullish. Nothing much to say out here. It continues to remain bullish, and so long as the 9-day exponential moving average, which is at 38,850, exactly the point is 38,841. So 38,840, 850, this is the support, key support level. Unless it falls below that and sustains below that, then only you can think of something negative about to happen. But what is happening at the moment is that whenever that kind of dips happen, buy mid caps, buy good mid caps, you are going to be benefited. That kind of a scenario is being envisaged by the movement of CNX Midcap 100. Well, if you like my presentation, please press the like button. Subscribe to my channel. Don't forget to press the bell button as well. We're going to do a few stock reviews. We have seen that lots of stocks which we recommended earlier had been performing. One of the stocks that we are going to discuss this time is Naukri. When it was falling, we suggested a level it will come down to, and then it will bounce back. That kind of a thing was happening. So apart from Naukri, there would be 3-4 more stocks under review. It will be brief reviews, but it would be interesting, it would be actionable. Now our first stock under review is Vodafone Idea. Its code is IDEA, and now you can see after a very long time, maybe 1 year or so, that it is getting into double digits and closing there. This week it has closed at exactly at 10. It went up beyond that. It went up to something like went up to 1040 or so, and after that it came down and closed at 10 rupees. Foray into double digits after about a year or so. This 200-week exponential moving average located at 12.60. Once that is decisively taken out, you will see a strong movement on the upside. At least that would take it to something like 14, between 14 and 15. Once it crosses 16, then there will be real gumption. Now, only thing that can be said, looking at the 14 RSI of the weekly chart, that Idea or Vodafone Idea is now on a clear bullish pathway. Till such time it takes out 1260, we can't say that it is definitively bullish. Once that happens, then it can move up considerably on the higher side. So the weekly chart definitely suggests a good upswing. Now, if you look at the daily chart, over the last week and the week before, it has shown a sharp upswing after a sharp correction. From 750 to 1040, this kind of a movement, this is a phenomenal movement, no doubt about it. And the fact that each time the stock is thrown back down to test lower levels, especially the levels around its 200-day exponential moving average, which is roughly around 7.75, and it bounces back again and again. That means that traders, investors, big players are getting bullish about it. So chances are that 1260, the weekly 200-week moving average, is the first target. Once that is taken out, it would be moving further up. So if you have purchased this, then put a stop loss below 8.50 on closing price basis. and expect it to cross or at least test the 200 week moving average at 12.60. Once that gets taken out, it may take some time. Then the next target would be somewhere between 14.5 to about 16. So idea is really looking bullish. Vodafone Idea is looking bullish. Our second stock under review is HDFC Life. HDFC Life, after about a month or almost 1.5 months, it is now showing signs of a turnaround. The correction in HDFC Life, which began from the close to 700 levels, it came down to 620 odd levels. Then it has started slowly moving up. It has moved up and closed at 641 on last Friday. It is trying to cross the Gann angle, but it has not been able to successfully do it. Chances are that you will see that the Gann angle would be taken out, because there are indications that the stock might actually do well. So immediately 640 to about 645, that level needs to be taken out. Once that gets taken out, then 660, 663, that kind of level would be the next target, and after that it would be 685, 690. See, that is the projection that one can make. This will become bearish again if the 50-day moving average and 9-day moving average, these are located between 636 and 632. If these two are taken out, then the first signs of bearishness will come. Otherwise, you can say that would be your caution, but the bearishness would be confirmed once it goes below 620. As of now, we envisage that it is unlikely to do so. Let's have a look at the weekly chart of HDFC Life, which the weekly chart shows that a sharp rise from the lower levels of 450 to about 680, 690, those levels, and finally it has moved, it has arrested the downtrend and is trying to move up. As we said, that weekly chart is also giving the same signal, but the Gann angle needs to be taken out. Once the Gann angle is taken out decisively by the stock moving beyond 650 and staying there, in that case we can see a retest of the earlier high around 680, 685. That if that is also taken out, then it can move up to something like 720, 725 kind of levels. So as things stand today, you put a stop loss below 620 on closing price basis and continue to hold on. Our third review stock is ICICI GI. This is one stock we recommended in the month of May. It has more than met our targets in the sense that it crossed all the targets, moved up and hit 1400 plus levels. After that, it suffered a correction, and that correction has been continuing until last Friday, when there is a green candle which is suggesting that it is completing its correction and trying to move up. If it were to really move up, it needs to take out the 20-day exponential moving average, which is now at 1347. If 1347 is decisively breached, which it could not do on last Friday, in that case there will be, if it is really breached on good volume based buying, then ICICI General Insurance or ICICI Lombard will move further up, and initial target would be something like 1360 to about 1380. After that, it can even move up towards 1400. So this is one stock that we recommended long back when it was at the bottom, and then it showed a brilliant upswing over the last 4 months. So I would still say, if some of you have not got out of it, didn't book your profit, then hold on. Book your profit only if it were to fall below say the 1280 kind of levels. If 1280 gets taken out, then only think of getting out of the position. Otherwise, continue to hold on. Well, if you like my presentation, please press the like button. Subscribe to my channel. Don't forget to press the bell button as well. Now we have come to the most interesting part, where I am willing to put my neck on it. The recommendations. Yes, there would be 2 recommendations. These recommendations I have studied thoroughly. In some cases, I also study them fundamentally, but mostly it would be technical recommendations. Just watch it. To start with, we are discussing IRCTC. IRCTC looks really bullish. If you look at the daily chart, there is a flag formation kind of a thing, and after that there is a breakout on last Friday. It closed at 685. Chances are it is actually developing a saucer pattern, and the saucer pattern would be complete when it reaches 760. So now there is a Gann angle, there are moving averages, so we have a very clear demarcated stop loss level. And what would be the stop loss level like? The stop loss level is around 642. But it would be even better, that is, if you are willing to sacrifice a bit more, say something like another 4-5 points, say 637 it should be your stop loss on closing price basis. On the way up, your target would be initially 720, and after that 750 to 760. Time horizon would be something like, since it is a very regular pattern, it may take several months, maybe 3-4 months at least, to reach those levels. But now it can even move faster, but we envisage at least a quarter would be taken by the stock to move up to those levels. From 1 quarter to about say 4 months or so is the time horizon. It's a short term buy. You can see that huge run up to 1200, that was September 2021. After that it has fallen, it has consolidated, now it is moving up. So when you look at the weekly chart, you understand that this is actually not just a short term bet. When we looked at the daily chart, it looked as if it is a good short term bet, where say you stay put with the stock for 3 to 4 months, you are likely to get something like 100 points from the current levels. But if you are willing to stay put, then you could again see it crossing into the territory of 1000. So 1000 to about 1100 we can envisage. How do we get this target? Look at the Gann angle, the second Gann angle, which is second Gann angle in the sense that first Gann angle resistance, that is your 800 on the right side, and the second Gann angle goes up to something like 1080 kind of levels. So this Gann angle can be reached from 1 year to about 18 months kind of time frame. From the 690 level currently, it can move up to something like 1050 to about 1100. So that's a good bet. And if you want to play for the longer term, knowing that the stock is pretty much bullish, so your stop loss for longer term purchase should be below 600 on closing price basis. So on the downside, you are foregoing 90 points. On the upside, the projection is somewhere around 350 to 400 points. Our second recommendation for this week is Hindalco, a metal stock, a base metal stock. It's an aluminum manufacturer. It has got copper as well. Hindalco is looking bullish. Hindalco has staged a breakout above the earlier highs. On the daily chart, we have seen that the volumes have been progressively increasing through the week. Right from Monday till Friday, we have seen volumes had been rising. And finally on Friday, it opened at around say 462 and went up to a high of 478.50 to close at 473.25. So Hindalco has managed to post a high for several months. After February, we haven't seen Hindalco getting past 475 today. Closed slightly below 475, but it crossed 475 intraday. So we are headed for higher levels here as well. Immediate short-term target is about 500 to about 510. But once you look at the weekly chart and the Gann angles, you can easily understand that there is every possibility that once the 500 mark is taken out, it is likely to move up to something like 550 to 600. So buy it for medium term. 550 to 600 would be your target, and since you are buying around 475, put a stop loss below 440 on closing price basis. Even the weekly chart looks pretty good, and the weekly chart also shows that 9, 20 and 50 week moving averages are now supporting the movement of Hindalco. 20 week and 50 week moving average is posting a golden cross. So even if it were to come down a bit, do not get afraid. Buy more, because it is going to go up. Hindalco has completed its correction. It went up very sharply through the years from 2020 to about 2021, and after that there was a big correction in the 2022 later part. After that it was more of a range bound counter, but now it is giving signals that it is headed for higher levels. So chances are you would see good bullish upswing over a period of time. Next 1 year or so, maybe initial 3-4 months, you might see good swing happening out here. You put a stop loss below 440. Target initially would be 500. After that it would be 545 to 550, and next it would be 600 to 620. Thank you for being with me. I hope the last half an hour had been an enjoyable thing. You have got some ideas, some interesting understanding, interesting discussion. Come again next week